In Q2 FY 2024-25, India's GDP growth slowed significantly to 5.4%, a notable decline from 8.1% in the same quarter of FY 2023-24. This downturn reflects a mix of domestic and global challenges, including weaker private investments, global economic headwinds, and inflationary pressures. The industrial sector, particularly manufacturing and mining, bore the brunt of the slowdown, with growth rates slipping into marginal or negative territory. The sectoral GDP growth rates for Q2 FY25 versus Q2 FY24 tell a compelling story. Sectoral insights and challenges. Agriculture. Growth improved to 3.5% in Q2 FY25 from 1.7% in Q2 FY24, driven by increased government support, including fertilizer subsidies and better irrigation management. Erratic weather conditions in previous quarters have stabilized, boosting rural incomes, albeit with room for improvement. Mining. The mining sector contracted by -0.1%, a sharp fall from the robust 11.1% growth in Q2 FY24. Global commodity price fluctuations and declining export demand from major markets like China contributed to the slowdown. Manufacturing. Manufacturing growth fell sharply to 2.2% from an impressive 14.3% in Q2 FY24. Sluggish global demand, rising input costs, and a cautious investment climate dragged down performance. Industries like textiles and electronics were particularly impacted. Breaking down India's economic drivers in Q2 FY25. Private consumption contributed approximately 58% of GDP, but saw deceleration due to weaker rural demand. Urban consumption remained steady, supported by strong spending in services. Gross fixed capital formation, investment growth was muted, reflecting caution from the private sector despite continued public infrastructure spending. Government spending. Public expenditure focused on counteracting private sector sluggishness, with substantial allocations toward infrastructure projects. Net exports, XM. Merchandise exports remained under pressure, but service exports provided resilience. Global supply chain disruptions and weaker demand from Western markets worsened the trade balance. Implications of the slowdown. Domestic challenges. Rural struggles. Limited agricultural and rural growth affected consumption in non-urban areas. Job market concerns. Slowed growth in labor-intensive sectors, particularly textiles and construction, raised unemployment risks. Global context. The U.S. Federal Reserve's rate hikes, alongside geopolitical tensions, increased borrowing costs for India, impacting investment and trade. Government revenue. Declining GDP growth directly affects tax collection, potentially straining fiscal consolidation efforts. Policy measures to spur recovery. India has shown resilience in addressing economic challenges with targeted policies. Enhancing private investment. Production-linked incentive, PLI, schemes aim to boost sectors like electronics and automotive. Example, smartphone exports increased by 24% in FY24, showcasing the scheme's impact. Inflation control. RBI successfully brought inflation down from 7.5% in Q4 FY23 to 6.1% in Q2 FY25. Continued efforts to stabilize volatile food prices are crucial. Infrastructure push. Significant investments of 10 Indian rupees lakh crore in infrastructure projects are expected to sustain long-term growth. Example, projects like the Delhi-Mumbai Expressway enhance connectivity, boosting productivity. Strengthening supply chains. Initiatives like the National Logistics Policy and PM Gati Shakti have reduced transportation costs, benefiting industries reliant on robust logistics. Focus on FDI. Reforms to improve ease of doing business have attracted substantial FDI, particularly in renewable energy and technology. Strategic recommendations for sustained growth. Urban-rural synergy. Align urban infrastructure development with rural welfare initiatives to bridge economic disparities. Private sector catalysis. Easing regulatory burdens and offering fiscal incentives could stimulate private investments. Global positioning. Strengthening partnerships with key economies and reducing dependency on volatile markets like China could enhance trade resilience. Green economy. focus on renewable energy and sustainability to align with global trends and attract long-term investments. Conclusion. India's economic slowdown in Q2 FY25 underscores the interplay of global challenges and domestic structural bottlenecks. However, with strategic reforms, robust public spending, and targeted support for vulnerable sectors, the nation is well positioned to navigate these hurdles. Balancing growth with equity and resilience will be key to sustaining its trajectory toward becoming a $5 trillion economy.